the mission of Acres is transparency for America's largest asset, land. We love the idea, and not everyone does, to be clear. We love the idea of all this information being available to everyone. Levels the playing field for the underdog. If you want to go create maps, if you want to go find some basic assessor data, information that's out there is very, very scattered. We needed a simple, single place to go and to find additional data. What we have built and are continuing to improve upon is an all-in-one platform to be able to go discover even more about a particular property or area.
Good morning, Carter.
Morning.
Thanks for coming on. Just so everyone knows, we're sitting down in your office here in downtown Fayetteville. Right in the corner of the square. How long have y'all been here now?
3 years in the spot. So we've been on the square for most of our lives, with the exception of a tiny period we were on top of Bordino's on Dixon Street.
Yeah, but in the heart of Fayetteville.
Absolutely.
So before we dive in, give everybody a 30-second overview. What is AcreTrader and what is Acres? Yeah, just so everyone knows who may not be aware.
AcreTrader is a farmland investing platform we've been working on for the past 7 years here. Inside of that, we built a data and mapping platform called acres.com. So we have two separate businesses in-house here.
Tell us your story, where you grew up. Let's start from the very beginning before we dive into the business. From Arkansas.
I am.
And was it Stuttgart where you from too?
That's right. So I was born in Stuttgart and then grew up. My parents were separated, so I grew up in Little Rock and then going to Stuttgart on the weekends often.
Okay. I assume that's where the inspiration for farmland began.
It's been a big part of me my whole life, right? Just being around there and being out in the country in the Delta.
Yeah. So tell us maybe about growing up. Were you always an entrepreneur kind of, through middle school, high school, going to college, or tell some of that there too?
Yeah, I think so. My mom was. My stepdad, or dad, I call him my dad as well, was also an entrepreneur. So that was, quite a volatile financial thing for our family,
Sure.
and not always in a great kind of way. And then my real dad is a doctor, a practicing doctor. So had a little bit of both, like this sort of stable science dad and then the wild entrepreneur dad. So I was lucky to grow up with two families actually.
And so what did your mom and stepdad do? What were they? Different businesses throughout the years? Or?
Different businesses throughout the years. Everything from my stepdad did banking and oil and gas exploration. He's a geologist by trade. My mom was in the candy business primarily, and then some real estate. So all kinds of fun stuff throughout the house.
Wow. And so did you go to high school in Little Rock?
I did. I went to Central.
Okay. Went to Central. And then from there to University of Arkansas?
That's right.
Okay. And were there any businesses you started kind of high school into college there?
There were. So did plenty on the side in high school and college. My parents were always a fan of us needing to work as kids. So
yeah,
whether it was working in restaurants or actually going and trying to start businesses. And then at the end of college, I started 3 businesses. 2 were absolute disasters. One was a medium success, I guess. So generally around automotive stuff. I was studying physics in school, but I was a traveling musician.
Okay. And
we fixed up our van to run on grease, like used vegetable oil. And we found out this is like a great way to save money. And so we're like, well, the bass player and I started this business. We ran for a few years doing just that, just converting old or new as well trucks, diesel cars to run on vegetable oil.
And how far, were you going the same amount of mileage you would on gasoline?
That's right. It's pretty crazy. So diesel and vegetable oil have very similar cetane, butane characteristics, but the viscosity is quite different. So you need to either make the vegetable oil thin to make it biodiesel with chemicals, primarily glycerin, or you can heat it up. And by heating it up, it makes it silky smooth and more like a liquid. So we would install these secondary fuel systems that basically would heat up vegetable oil and then pump it straight into your block.
Wow. So what kept that from going there? Was it just too complicated trying to get?
No, it was, we made a living on it, but I came home every night, covered in diesel fuel. And my now wife was just like, you smell awful. You can't wash it off your skin. It was quite an adventure. And we both my friend and I moved to Little Rock in 2006, and I had a weird chance interview to go work at Stevens. And ultimately I I knew I had a real passion for business and business building. And my thesis at the time was I'm going to go learn, and I'm going to go study businesses so I can then build a better business. And strapped on a necktie and thought I would do that for a couple of years. And I ended up spending 7 years there and then 5 years on the West Coast at a long-short equity hedge fund. So a dozen years of studying businesses that was invaluable and an incredible period of my life.
Yeah. So what would you tell someone who's maybe at that point right there before you dive into Stevens to do that, yes or no? You know, if you're thinking about, if you see yourself as an entrepreneur kind of early age, like you did, would you recommend doing that path or not? And
I don't know. It's always like what you are going to make of it, and I found the opportunity to be incredibly helpful, just because I like digging. I like research. I'm an analyst at heart, right?
Yeah.
I really like the idea of going and studying new things all the time. And so that really appealed to me. And I think because that's natural to me, I was able to be at least decent at that job. But that certainly needs to be a characteristic of the person if you want to go succeed in that.
Where did that come from? Is that you've always been a learner in that way? Always been very data intrigued?
Yeah, I was referring to my stepdad earlier. I call him Dad. It's confusing. I have two of them. He's 90. He's an old man. Married my mom, and he was much older than her when I was a tiny baby. And he's always said, he's like, I've lived a really full and adventurous life because I'm curious. I'm lucky to be curious. And I think that was just a big part of our household growing up, was just like, and frankly, like, it's not necessarily about academics. It's about going and learning the things you want to learn. It doesn't matter how bizarre or off color or what, if you want to go be a Dungeons and Dragons freak, like, just go get really good at it and go dig in and go have fun. Sorry, not freak. But a Dungeons and Dragons person, right? Like, and I always, I think, appreciated that mentality, and perhaps that's nurture and nature. I'm not quite sure.
Wow. And it sounds like that's kind of the mentality you have with your family now. Just stay curious.
Yeah. Like, I think the thing that my parents, I've gotten plenty wrong as a parent. My parents got plenty wrong. One thing they got very right as a kid was keeping the screen off. And a thing that in our household we feel the same about, me personally, but also around our children, is just like no screens. Mm-hmm. And very, very intensely so. We'll have a movie on the weekends, but we're not like complete Luddites. But the idea is just like, if you allow yourself to be bored, then you immediately start to go find new creative things to do and different pursuits to go after.
Well, so talk about maybe your time at Stevens. What were some of the valuable things maybe you learned during that process, whether it be technical skills or just things that you brought with you to San Francisco and then to AcreTrader?
So I had a really great mentor and boss there, actually a couple of them while I worked there. And that company was really good about giving folks autonomy and letting us each sort of build your own small business, inside, your own practice, if you will, inside of Stevens.
Oh, wow.
I was in the research department there. So I learned Excel really well. I've had a knack for that. Math's been a thing I've always enjoyed. So it's like simple math, but the computer does it for you. And so learning and diving in to learn how to build macros and Visual Basic and really nerding out in Excel was a fun thing to me. Wow. I went from a really bad writer to a like almost passable in grammar. Like, I'm still not great, still to this day, but it was a really great training ground for me to do those things, and then to learn the muscle of being an analyst. And I think that the thing that became really apparent there is in the research process of studying a business or really anything, it's like, all right, here's the primary outline, the things that we all understand. And there's a couple things over there that are confusing and weird, and I'm not going to look at those things because it's going to be too much trouble. And over time learning, and especially as I became a short seller, learning like those are actually the things you need to spend all of your time on. The things that most people pass by because they're footnotes or they're not necessarily important. Everybody already understands the big story. Going and digging on the hard thing or the weird, confusing options set up around the equity, whatever that may be, it tends to be where the outperformance is in public markets. But more generally speaking, the fun thing, right? You get to go learn the thing that most people aren't paying attention to,
and that may give you the competitive edge, over somebody else, or just help you win.
That's right.
Yeah. Talk about leaving Stevens and then going to the Bay Area. What were you going to do, and what was the purpose of the move out there?
So I had some friends that were at a very large hedge fund out there, and they were going to leave to start their own. And so I went to go join them. This is in 2013. So my wife and I moved out there. It was just like, hey, let's go have some adventure. Frankly, we always knew we were going to come back to Fayetteville. Like this is, we met here the first night of college, and it's just a place near and dear to us. So, hey, let's go have some adventures. And then hopefully someday we can have a family and go to Fayetteville. So actually got that part right. A lot of misses along the way, but it took us a dozen years to get back. We thought it would always be like a couple.
Yeah.
But been here for 7 now almost, and not leaving.
Yeah.
Unless you guys kick me out. But,
no, don't plan on it. So help them start that hedge fund out there. What was your role out there? And tell me again, how many years were you in San Francisco?
We were there for 5 years.
Okay.
And my role was primarily as a short seller. So the fund was deep dive fundamental analysis of medium and larger sized public companies.
Okay.
And so while I would always have a long investment or two, and we think about a concentrated book. We had a $1 billion book, and we would have positions of $50 to $100 million in individual names. So you better get it right, right? It's like it's really, really intense deep dive study of the company, of its leadership and its culture, of its outlook, et cetera. And so I had long positions, usually in consumer, retail, technology here in the U.S. and in Europe, but spent most of my time doing the opposite, which is going and finding companies where they were covering things up or where there were real issues, and betting against the bad players in the market.
Okay. And for someone who's maybe not familiar with that world, the timeline of a short seller, what's that?
Yeah. So our average duration on our longs were multi-year. Our average duration on our shorts was like 6 to 9 months, which is a really long time for a short. But again, we were very, very fundamental in our analysis. So this was not about trading so much as it was about like, hey, we've identified a big picture trend or a big picture problem or lie, right? And so we're going to actually go in and lean against this because we think that this equity value will correct.
Yeah, seeing through it.
Trying to. I got you can be very, very wrong in that world.
Yeah.
Right. A stock can go up infinite. It can only go down 100%. Right. So your risk reward can be very dangerous in the world of short selling.
Yeah. The GameStop era.
Oh yeah.
How was the fund's performance while you were there?
Great. Yeah. We were always proud, in particular, of the alpha we were able to generate on the short side. That is a muscle that is not as well tuned. And there was a leader in the fund that had a really great history of that. And I had spent a lot of time on the sell side at Stephens as well, and just really, it's really rewarding in those moments to. And we all want to be right. Like I'm a stubborn person. It feels good to get to be right sometimes. And those are really rewarding moments when you're like up against a lot of folks and you've actually identified something that folks may be overlooking.
And so when was the cue, hey, it's time to come back?
So, I said that thing a moment ago about like always look at the thing over on the side and pay attention to it. I utterly failed to do that in the world of farmland, right? So I spent my life around it. I'd begun buying and selling and had a real interest in investing in farmland at Stephens and then on the West Coast and was actively doing so. And yet, like, I just dumbly, like, never zoomed out, right? It was always like a me thing. It was like, oh, I'm going to go trade farmland. It's this completely idiosyncratic wild asset class that there's very few people playing in, and it's totally opaque. So there's opportunity to create real upside. And I like viewed that from my own personal investing lens rather than like, it's embarrassing. Like, but I didn't zoom out and say like, hang on, like other people would like to do this as well, until friends began asking me that. And then frankly, my dad I was referring to earlier was just like, hey, why don't we, if we want to have other people invest in farmland, why don't we like create a token? And I was like, you idiot, those are a fad. This is like, in 2016, right? Like, those are a fad. That's dumb. And then he's like, well, I'm thinking about investing in Bitcoin. And I called him a effing idiot. Again, like, don't take investment advice from me when it comes to crypto. Lesson number one of the day. But that idea really dug at me of like, can we make this an approachable asset class?
Sure.
Because for most people, buying farmland is just a non-starter. You got to go out to a place you've never been, put down a huge amount of capital, probably through some broker you've never met, in a county you've never been to, and now you get to manage a farm. And like that's just not a muscle that folks have front to back. So,
and how were you doing it before? I mean, were you going out and buying these farms?
Yes.
Okay.
Yes. I had an interest. I like to hunt. I
Sure.
like the world of agriculture, and so it was really a fascinating investment opportunity for me. And then ultimately zooming out and realizing, hang on, there were new securities laws and securities exemptions that had come about via the Jobs Act in 2012 and put in place thereafter, and that allowed you to basically go do an IPO for really small assets. So doing an IPO used to be a six-figure consideration. Hey, I want to take my company public. I'm going to have to go spend hundreds of thousands of dollars in legal and filing fees to get that up and into the wild. And these new regulations allowed you to go do that at a very small level and it cost dramatically less money. So you could do it with smaller assets. And so that was the genesis of this idea of fractional investing that has since grown quite a bit in popularity, of taking large assets, put it in a unique LLC. So in our case, farmland, but people are doing it with art, with real estate investments, whatever that may be. Yeah. Take it, put it in a unique company, basically, and then divide it into units or shares and allow folks to buy into it.
And so you and your dad are talking at the time. You're still in San Francisco, or have you already? As soon as that idea happened, did you immediately move back? What?
I did not. I spent better part of a year, ruminating, kicking it around, working with attorneys to make sure this was actually feasible from a legal standpoint.
Sure.
And then scoping the technology side. Knew from the beginning like this needed to be a scalable business, so we've got to build our own financial technology or fintech platform underneath it to operate it.
And were you the ones who was building that at the time, or did you have friends or colleagues that were helping you build the software kind of on the side, maybe as you were at the hedge fund?
That's correct. I know nothing about actual Python and front end code. So I love product. I really love going to websites and interacting with them and trying to understand mechanically how they work, but not at a code level. And so I just created a sheet. I'm like, all right, I'm going to go put my favorite 100 fintech companies on here, ones that I think, I knew like 26, so I had to go do real research, put together a list of all the ones that I thought had interesting technology, boil that down to the 20 where it's like, hey, these work really well and they're like attractive and easy to use and intuitive. And then I just reached out to the technology leads of all those 20 companies, and only a few of them responded to me. And one of them was a guy named Vlad that we sat down with him and scoped out, hey, this is sort of what I'm trying to build. And he's like, yeah, that's ridiculous. It's going to take a lot of time and money. It's way harder than you think. It was way worse than what he said, by the way. Yeah. but ultimately, after speaking with Vlad, it's like, all right, this is approachable and this is reasonable to do. So then he and I began scoping out over the next several months what this would actually take to get off the ground.
Wow. This isn't Robin Hood Vlad, to be clear.
No, it is not Robin Hood Vlad. Okay. That'd be funny. I thought he was an idiot. Right? Like, who would do crypto? That's so dumb.
Yeah. Well, and we'll get there. But just I have the Acres app and I've been looking at the website. It's definitely evident that you were very intentional about the technology from the beginning. But sorry, go on.
No, I think kind of hearing you speak, even to the analyst part you spoke to earlier, I think a lot of people maybe graduating from school start in an analyst job, and it's almost like a not derogatory, but it's very entry level to use the word analyst. And you're sitting here saying you're at this hedge fund and you're analyzing 26 companies, and that's the thesis for like what you're going to start. So I think there's some power in analysis, and being an analyst is actually one of the most powerful tools to find a solution and a need to a problem in the marketplace. So,
yeah, inside of business, there's this idea of being strategic and being tactical, right? And strategic is like, I have this vision, I have these ideas, and here's how I'm going to design the flows within the business and the process in the business. And then tactical is like rolling your sleeves up and getting in there and doing the work. I tend to default to tactical, and sometimes that's a real weakness within our company. But I do believe that diving in, understanding the details, going in, like actually working in Excel yourself, going in and actually reading the documents yourself is important to build that foundational understanding of how you're going to ultimately attack your larger strategic goals and vision.
Sure. So talk about making the jump, launching the software. raise money from out the gate when you were building the software? Talk about that time frame.
Yeah, so the jump from Arkansas to San Francisco was pretty daunting because the fund at that point as well was a startup, right? We didn't have real assets, and then coming back and starting a business, and like frankly, over a dozen years of studying businesses, it was always like that looks like it's probably a lot harder than I think it is as an outside analyst. What are your incremental EBITDA margins? It's like, no, those are humans. This is not math and paper. I could not have possibly ever understood how actually difficult it was, right? Until you get in the trenches, and it's just, my goodness, it's overwhelming, the amount of difficulty in ramping up a startup. So I'm sorry, I'm a little off track. Was it scary? Yeah. Like I left a job, and it was my dream job. I loved the job. I loved the people I worked with, but I had this like burning desire to build something, and I finally had an idea. I built, backstory. I'd built a dozen business ideas over the years, and 4 or 5 of those came, like I actually built out a full business plan, slide deck of what I wanted to do, and did not pursue any of them. And this was the one where it's like, this makes sense. I can't find the big holes. I'd have my friends and other short sellers challenge it. Like, how am I going to fail? And decided to pull the ripcord. So that moment though was still pretty scary of hopping over. And
was it just you from its inception?
It was, yes. You had asked about raising capital. It was me initially, and I had saved up, and so I self-funded the business for the first year and hiring the technology teams. We had a squad of 5 or 6 folks that I worked with. They were actually initially a Ukrainian-based team,
wow.
And then began to add some folks here in Fayetteville. It was really, really hard to find technology talent here initially that would jump on with one crazy guy in an office above Bordino's, but found some really great operational folks and marketing and legal, some of which all of which I am close friends with still today after 6 years.
So just to make sure we understand the timeline, did you move and then start the platform, or were you operating it for a little while out of San Francisco and then kind of got the office here?
Moved and then started. So I actually transitioned out of the fund. I managed the positions I had through most of that year. So ramped that down. Let me rephrase it. Ramped that down and then ramped up the AcreTrader business.
So that's roughly 2017. You're kind of exiting the hedge fund. 2018 is, we'll call it, the inception of AcreTrader.
That's roughly it.
In farmland, I mean, you're coming from the investment world. Like, the returns historically on farmland, we'll call it the alpha, as you cited earlier, has been historically lower. Is that correct?
So this was the fascinating thing, right? It's like I was in there investing in farms and like making returns I was proud of, but like I failed to recognize that like actually as an asset class, it had been performing pretty well. And so zooming out on the asset class and beginning to do research in that far too late after I was already well invested in playing with it myself. It's like, oh, I am not actually that smart. It's just that this asset is relatively super interesting. So those historical returns have looked like 11 or 12% a year, but with far less volatility or variability in asset price than you see in lots of public markets. So it was a little more of a consistent compounder. It was not a get-rich-quick scheme. It never has been, never will be. But it was really attractive as something that could play as a hedge against other asset classes, was relatively isolated in its performance, and ultimately had been performing really well historically. So it's actually a pretty fascinating asset class to dig into, and one that is worth checking out.
Yeah, and I think that was one of the most fascinating things on the website, on your AcreTrader website, was seeing your charts from 1990, but seeing how the asset class has performed since 1990 versus gold, crypto, commercial real estate, bonds, whatever, S&P 500. And I think that's the question a lot of investors would have, right? Is like, well, cool, land, that's great, but like, how does it compare to other asset classes? And I think y'all have done a great job of highlighting that.
Thanks. The 1990 thing is an interesting call out. That is as far back as we have good data, which is crazy. This is a multi-trillion-dollar asset class. And that's really, we'll get into acres.com and the exciting story there in a moment. But that's really what drove us building acres.com. It's just like there's no information about this, what is physically the largest asset in the U.S., but quite literally a $4 trillion market. just farmland, right? Before we talk about recreational ground or timberland, it's like staggeringly large, and yet so few people have been paying attention to it.
What changed in 1990? What data existed or didn't exist before that?
One group of smart institutional investors got together and worked with a third party to validate and begin to verify the investment returns on farmland. So before that, there's some rough USDA data out there that shows just the asset price itself, but that ignores the fact that there's also yield. There's cash. Just like if you own a building, right? You can earn money from that building appreciating in value, and you can earn money from rent coming out of that building. Same is true with farmland.
So let's double click into farmland, because I don't think a ton of people know about it. You're getting into your entry into AcreTrader. It's 2018. Like, how has farmland changed since then? I mean, you said farmer leases, that kind of stuff. At that time, I assume primarily it was just institutional money in farmland. Y'all were really the ones kind of spearheading the democratization of it. So talk about how it's changed since 2018.
Yeah, we've seen. We can look at Google Trends and just see like general consumer and public interest in farmland. It's grown a ton. The number of institutional funds have grown, I don't know, by like an order of magnitude almost. So there is a real increase in attention to farmland. Bill Gates bought a bunch of farmland, and the world saw that. It's like, oh my God, he's going to come take our land. He owns. First of all, he is the largest farmland owner in the United States. He owns 8 basis points, roughly. So 0.08% of U.S. farmland. But when you see the numbers, it's staggering because it's a lot of farmland. We're getting into the billions of dollars here. But on a relative basis, we're so fortunate in the U.S. to have so much farmland. So that trend is still very, very early, in our opinion. We are 1 or 2% maybe institutional ownership and investors owning farmland, and compare that to just about any other asset class, like whether it's malls or commercial buildings or office buildings or the rentals across the street, and you're 20, 40, 80% institutionally owned. So that's a trend certainly we feel still very early.
And as you're kind of diagnosing the problem of farmland, like farmland that you used, did you use the word beta earlier, right? Which is volatility. You were talking about volatility, which is beta. The beta is lower in farmland investments. So in general, it's a more safe or secure investment for listeners to kind of understand.
Yeah. So generally speaking, that's right. We historically have seen farmland swing in values less so than other asset classes, and also not show any real correlation. So, right, often when one asset class moves, it moves another one. So your correlation between the two. It's just a fairly obvious and common thing, and that does not really occur that we can find with major asset classes relative to farmland. But I also want to tap on this theme of, and I think the immediate question is like when you said the problem statement, like, well, why is this good for the farmers? Why is this good for America to have more capital coming into farmland? First of all, investment going into rural America is a thing that we are a big fan of. A lot of folks would consider us rural here in Northwest Arkansas, not having seen the region. We love the idea of capital flows into rural America. And what we do as a company is work with farmers. So where most of the farms that we originate come from is the farmers themselves. So to back up a little bit, like, this money is coming in and buying farmland. How is that a good thing? That first of all, that has always occurred. About not quite half of farmland in the U.S. is rented out already. Think about this from the farmer's perspective, right? Like, I have a business called farming. I have employees. I have equipment, very expensive equipment, and I have all of my money tied up in this asset that is the land. That farmer has economies of scale, right? If you have that combine, you can use it across more and more acreage. And so most good farmers are in growth mode or want to be in growth mode. They want to go grow their acreage. But it would be absurd to say most farmers can buy the tract that comes up for sale for $2 million. And so what we do is go in and partner with that farmer and say, hey, we'll put up some cash. Sometimes they put cash in as well. And we'll go buy that farm and we'll work on this together and get an agreement up front that allows that farmer to expand their business.
And prior to y'all, farmers would really just expand through leasing more ground, right?
Correct. So the way often is the farmer would have to find a rich person, and that's not always available, to say the least. But the lucky farmer would find a rich person who would go and buy farmland alongside them. And so what we have done is sort of professionalize that, if you will, alongside that farmer, where it's a far more equitable, far more repeatable process throughout the United States to help a farmer grow their business.
I mean, it's clear in hindsight, looking back, it was a problem, but it's even clearer now that like y'all have made strong progress accomplishing that. So really, really neat. So it was kind of going back to inception. I think we've really talked it through the asset class, talked through the problem that AcreTrader is solving from inception in 2018. You talked about self-funding it for a year, and you kind of get to the end of that year and you're like, okay, there's a business here. There's money flowing in. I can see the problem solved and the market rewarding it for us. I need to raise money, or just walk us through. Okay, you're at the kind of year of self-funding. What happens next?
So it was apparent from the beginning that if we want to scale this business quickly, outside growth capital is going to really help us, right? To go and build the technology we truly need to have a scalable business, to go do the marketing and build out the operations to run the company. So in 2019, so yeah, I'd gotten the dates wrong earlier a little bit. 18 was the transition year. So 17 and a lot of 18. 2019, we raised a pre-seed round of investment. And the general approach to the market, like what investors want to see, if I'm to like overly simplify and bastardize their view, right? One is they want to see a big market, right? So they want to see a large market opportunity, like check.
Yep.
Two is they want to see product market fit, meaning that they want to see that you've built a product that has some demand, right? That people will actually become customers of. So we've got the addressable market, we've got a product that goes into that market. And then the third, and especially in the early stages, perhaps most important thing is team. They want to see that your team, the folks working around you, are really good. And if there is one thing that we have gotten right since day one, if we've gotten a lot wrong, I'm sure we'll have plenty of opportunities to talk about that today. The one thing we have consistently gotten right is team. We've been very, very intentional about what we would refer to as talent density, and the idea of working with incredibly, incredibly talented people has been something that's driven me since day one. And it's the reason that I still come to work every day, and the reason I come to work excited, because I get to work with absolutely brilliant, driven, curious, creative, like interesting, frankly, like often really weird people that I love, and it is a lot of fun.
How did you do that?
By being really, really careful in hiring, right? Like I think that's the first part. The second is by being very aggressive in firing as well, and that part really sucks, and it's something that we do well. It's something that we find to be really important. I'm starting backwards. I'll start from the negative, right?
Yeah.
In letting people go. If we fire somebody, usually we've made a mistake, right? We didn't appropriately underwrite the position or the person, but it's usually that combination, right? This person's great. Like they've been through the interview process. We like them, but we put them in the wrong role, or we set them up in the wrong way, or we didn't give them appropriate training. So I feel incredibly strongly that any time you let somebody go, you let them go with their dignity, because you've made a mistake. And so we take that very seriously. And I won't go deep in the tactical details, but I think that's a really important thing for us. But really, really try to avoid that. And by the way, we do that very quickly. We don't have performance improvement plans. We don't spend a lot of time. It's like, hey, this isn't working right now today. I'd rather give you a lump sum of cash and allow you to spend this time finding an appropriate job. But we really try to avoid that by hiring on the front end very, very, very cautiously. So we have like a really annoyingly long interview process. I find that most companies like, hi, nice to meet you. A few hours later, let's get married. And this is like, this is not the caste system, or this is not the 1930s. Like, let's take our time here, and let's make sure that there's real love here. Yeah. And so we want to, and I can talk about that process, but we want to underwrite them, and importantly, we have to give them the opportunity to like make sure this is what they want. This is, we would hope to say this is not a normal place to work, and in mostly positive ways, but in some negative ways also. So they've got to make sure, that they want to be part of this. Because if they don't, then again, we've made a mistake and they're not going to want to be here and we'll have attrition.
That's so good. And I know you won't dive into the tactical kind of piece here, but I'll highlight it because that's what we want to do.
I'm happy to. I was just trying to interest the time.
No, but you're just highlighting things and founders here locally that we admire. And I know someone who exited the organization, and now it was more kind of timing 2022, 2023 when the business is just a tough market. And they told me that y'all connected them with kind of mentors in the area, helping them transition into the next job. And I was like, I've never heard of that. And someone exiting a company like that. So thanks for doing that. And in the area that we live, we appreciate that. So.
Thanks for saying that. I have to make sure that I'm not taking all the credit for this stuff, right? Our head of HR here, Morgan, is an incredible human being, force of nature at work, and a person who I can't say enough good about. And in this moment, and we can talk about this as much as we want, like 2023 was a bad year for us. We made lots of classic venture-backed mistakes. We raised too much money. We went out and tried to do too many things at one time. I had everybody in the world tell me, why are you doing so much at once? And like, because we can do it. We're smart. And that didn't work. And interest rates moved against us in the business. And so we had to correct. And what that means is like, a RIF, which is like a nice corporate word for layoff, like a reduction in force, a RIF. And that means like, hey, we got ahead of ourselves. We're spending too much money. And the biggest expense we have is people. So of course you cut everything else first. And then we had to reduce our headcount some. And in that moment, again, we made a mistake. I made a terrible mistake. I owe these people more than just like, goodbye, have a nice day. So we did a cool thing that you're referring to, which is we inverted our HR organization from being a recruiting organization to a placement organization to work with those folks, to go try to find them jobs and to make introductions. They're talented people. This isn't like, they weren't being let go because they were bad at their jobs. They're being let go because the world turned against us and because I made mistakes. Like we owe them that.
There's cycles to every business. I think us talking through that, and you have a very unique perspective being venture-backed. There's not many companies, especially your size, venture-backed, who've raised as much money as y'all have in the state of Arkansas. That list is extremely short, and I believe you're at the top. And so lots to learn from our listeners, for us, I mean, for anyone. And so we'll get to that. Kind of going back to the beginning. So you said there's the TAM, the total addressable market, that markets are looking at or investors are looking at. There's demand for the product and there's team. As you're early on in this, is the product that you're building AcreTrader, you're releasing a farm, you're partnering with, kind of walk us through, for someone who hasn't used AcreTrader, hasn't invested with you, what the product is that you started and what it is now.
The product from the investor standpoint is very straightforward, right? Hey, you have the opportunity to invest in a farm. And rather than going and buying $1 million farm, you have the opportunity to go and invest $15,000 or $20,000, which is still a lot of money, but it is a lot less than you would otherwise investing in a farm. So that investor is coming in and investing in an LLC and then owning a portion of that LLC, which owns the farm itself. So that means that they get to participate in any income that may come off of that farm, as well as any appreciation that may occur from that farm growing in value.
And is that accredited investors only at the time, and is it still to this day?
That is correct. We have always had this dream of non-accredited investors. The reality is, as a business, is it's really, really expensive to do. The regulations there are difficult. In some ways appropriately, in some ways not. I think we are excited that the accredited definitions are evolving. So accredited investor means that you either have a certain amount of money or a certain amount of income or have taken some tests. And the SEC is expanding the definition of those to encompass more folks that should be able to, in my opinion, be able to invest in these assets. What the SEC is trying to protect is that the reality is non-liquid assets are very different. Alternative assets are very different. They tend to come with higher risk. They tend to come with lockups and liquidity. So you put money in there, you're probably not going to get it out for 5 or 10 years. And so the intention of these rules is to limit and make sure that folks don't make mistakes. Now, the reality is, unfortunately, or fortunately, depending on your views, is that same consumer that we're protecting against investing in things like farmland, can go put it all on black and, triple levered ETFs, which are some of the worst things in the world to invest in. Or they can go play around in crypto and go gamble. Or actually go gamble now, right? So there's something a little off here, but the reality is we have to work within the constraints that we have from a regulatory standpoint. So today is accredited investors only.
Okay, so investors can invest in, we'll call it fractional shares of farmland with you. That was the product from inception, and called farmland is an extremely vague term. So are we talking farmland where, wheat, soybeans, like kind of middle America? Are we talking like vineyards, almond orchards? Like, how is the business segmented from the beginning? How's timberland? Like, what can investors invest in with y'all?
So you've actually nailed the three primary types of the asset there. First is what we would call row crops or annual crops. That's things you're growing every year. That's the stuff when you're driving by in the car and it's clicking by really quickly and it's really pretty and symmetrical. So things we grow here in Arkansas in particular: cotton, rice, sorghum, soybeans, wheat, corn. Right, soybeans and corn are the majority of row crops in the United States. Then there are permanent crops. So that's things that grow on trees or vines, right? So exactly, almonds, avocados, oranges, lemons, pistachios, grapes, whatever that may be. And then the third type is a little bit different and walks and talks a little bit differently than those two, is timberland. And each of those three have slightly different performance characteristics, different risks and rewards. We tend to focus our efforts pretty intensely on the first, on the most boring of the three, frankly. Very simple row crops.
Why?
Historical risk-adjusted returns there are intriguing to us. Frankly, it's just a muscle we have that we've built that our teams are really good at evaluating and understanding that. And it's the large majority of the actual land. So most portfolios in the world of farmland are mostly row crop.
Okay. And you said risk-adjusted returns, historically have been what for row crops? 3 to 6%, 5 to 10%, 10%?
10 to 12, 11 or 12%, something like that. So, and that's split roughly, you have appreciation that you can get from the value going up, and you have rent you can attain or, through either direct rent or revenue shares with the farmer there.
And so for someone who's not in the farm world, right, they're investing in a farm. We'll call it South Arkansas. It's growing corn. We'll just be easy. It's growing corn. Everyone can understand this. Growing corn, terrible year for corn. They invested $50,000 with y'all. Obviously, farmers have insurance, stuff like that. What does that year look like for an investor?
So the farmer, let's use the analog of a restaurant, right? Restaurants have good years and bad years. They usually pay their rent the same to the building owner. That can roughly hold in the world of farmland. So commodity cycles, right? If corn is depressed for several years, that can put pressure on rental rates. Those tend to be annual contracts, unlike the restaurant that's signing a 5-year deal usually. So those can move around, but the rental rates tend to be far more stable than the actual net income coming off of that farm each year, which can have true boom and bust cycles. But that's the business of farming versus the business of land ownership, and those are not the same thing. And they sometimes overlap. Like quite often, the farmer also owns their land, but again, very often they do not.
And so, coming from the commercial real estate world, sometimes you use an analogy of a restaurant. Sometimes you'll see those leases structured with a percentage of sales. Do you ever see those structures on the farm side as well?
Absolutely so.
Is that more common than just a straight lease?
There's three types. There's cash rent, so I'm going to pay you a flat fee no matter what. There is a split or a revenue split, basically. So let's say the farmer says 20% of revenue goes to the landowner, and then there is something in between called a flex lease. But yeah, there's various types. But again, like the restaurant's actually a really good point to make, that the restaurateur, it's almost weird if they own the building they're in, right? Like almost never do they own the building. And so in the world of farmland, again, it's more like half that they do.
Yeah.
So I'm kind of going back to your intro here, because you're really, it's inception, you're building the product, you've got the TAM. You talked about $3 trillion is the farmland kind of valuation of that sector in the US. You got the team. I think the demand for the product's there, but if I'm an investor, looking at AcreTrader early days, I'm like, how many farms have they exited? And what were their IRRs on those farms? So I imagine that was an objection, whether it was in the capital and venture capital world, or as you're starting to kind of put some wins on the board and expand. Can you talk about exited farms and the success or lack of those as you're trying to scale something really quickly?
Yeah, we have exited some farms and post that on our website. But generally speaking, like those first couple of years, it's a leap of faith, right? At the end of the day, like the investor investing in farmland is underwriting the asset class, they're underwriting the farm itself, and then they're underwriting us, right? Like at the end of the day, do I trust these yokels in Arkansas with my capital? So all three of those are difficult hoops, quite frankly, for the investors. So it was not easy finding early adopters, right? With lots of people who said, I love this and I want to come invest in farmland. And then it comes down to it and it's like, actually remind me, how long have you been in business? We're like, 1 year. Yeah. How many farms have you guys run through the platform? 2. It's difficult to build that trust. And ultimately, as it is in any business, and especially early, like trust is the thing that matters. Arguably more than anything else. Does your customer trust you to do right by them?
And so you didn't have that many kind of run through the platform early on, but could you pull on? I know you said you invested in farms on the side, or was at the hedge fund, or while you're at Stephens. Like, could you pull on any of those examples for investors to kind of showcase?
No, I think what we would do instead is point to, and we still do, point to the asset class as a whole and say, look, this is the historical returns of the asset class. Then we as a team, and more so the other folks that work here, have experience in underwriting and buying and selling and understanding this asset class.
Well, it's super impressive now, and we'll get there. But like, if you look at your website now and seeing all those farms that you've exited, and just seeing, I was looking there last night. And I was like, you have a deal right now. It's like 23.3% IRR that like you exited. I was like, really? It's like oh, that's crazy.
Yeah.
But obviously they're not all like,
that is unusual, right?
Not all like that. But most of them were kind of in the window. You said the 10 to 12% range, but it was just, the more stories you have, then it starts to stand out. But it was just cool to see.
Thank you.
Yeah.
So we're in that kind of 2019 timeframe. You're growing. There's a market. You're raising capital. What is it like building a novel idea? I mean, we've talked to 7 founders now, all of them operating in businesses that exist, right? Coffee has existed, barbecues existed, and restaurants have existed. Different businesses have existed. You're trying, and this for not for better or worse for any of the other founders, but like you're trying to build something that doesn't exist. There are inherent things that make that really challenging. Can you talk through like some of the emotions you were feeling?
Yeah, I would be remiss to overlook the fact that like when you say barbecue and coffee, it's not just barbecue. Like these are the best.
Oh yeah,
right. This is the best barbecue and the best coffee. Like things that they're like it's maybe even harder is going into an existing industry and succeeding to that level and becoming like literally the number 1 player in brisket. Right. That's pretty big. We have the unfair advantage of competing against things that don't exist. Right. So it's just a very different approach. It's daunting, but it's super rewarding, right? Like when you see that actually succeed, something go from concept into fruition and like actually employing folks and then providing returns to investors, like, and you see this begin to work, it's incredibly exciting. It's hard. It's just hard in different ways. And like, I can't imagine even having the gumption to say, I'm going to go try to be the best barbecue chef, right? Like I'm going to go try to just truly outclass what is an incredibly competitive field of coffee. So I got a ton of respect for those folks as well.
No, and we do too. I think what we're trying to highlight is like, there's just there's differences in trying to build something new versus what they're doing. I think you captured it really well. Like they have had to compete tooth and nail with businesses who've probably been, you talk about Wright starting in 2018, they're competing against people who've been doing barbecue for 40 years.
Yeah.
And in 7 years, they're the best in Northwest Arkansas. That's unbelievable. So I think what we're trying to highlight is like a new idea. How is that different? What different challenges are you up against?
Yeah, it's one is I'll go to the negative side. Others copying it. We had competitors stand up the same business model, go and literally copy and paste things from our website, including our like mission and vision, and put them on their website, and then go tell people like this is a get rich quick scheme. Basically, like you are going to get rich quick, and we've seen a lot of that die down, which is great over time. But that actually became really, really difficult for us. To have other folks, so when you're in this world of novel businesses, if you will, other folks can tell a different story. And if you're willing, and many people are, to tell stories, that's hard to compete against, right? I'm going up against somebody that's willing to overpromise and underdeliver when we're trying to do the opposite, becomes really difficult in that moment to compete effectively.
That's a great learning for someone who's out there trying to come up with a new idea or run hard against something that isn't in the market. That's a great watch out. So
yeah, it was. We were invested at the fund in tractor supply, and it was a position I maintained and loved working on. And they had this like incredible president, divisional president there, and then ultimately the president of the company. And he would always say, "He's like, and they've won, right? Like they have just crushed it at the whole farm supply store concept, but they never ever slowed down. It's just like had this intensity about how they ran their business." And his quote was always, "Run like you're being chased." And that for us early on was really important because it was amazing how quickly we were being chased, and that is. Very true in the world of AcreTrader. That is very true in the world of acres.com. Is that we may have a success one week, but like you can be assured that somebody else is going to come compete against you effectively. And they're not bad. Like our competitors are not, well, I'll point to acres.com. The competitors there are effective. They're good. And we'll go build something novel. And then we know that that's going to come out in other places soon.
And kind of closing out the early on piece of your business, raising capital, that's been, like you said, from the beginning, you knew to scale quickly, you would need capital. Arkansas, historically, people have been like, oh, it's, really hard to raise capital. And I think since maybe the Acumen guys, y'all have raised the most capital in the state. Can you talk through those challenges, maybe the tailwinds, headwinds with doing that?
Yeah. So like the world of venture is an odd one, right? And it's not something that comes by naturally, generally speaking, to folks that are inside of it. Like, and there's lots of criticism and there's lots of appreciation and optimism, but most people have some sort of opinion about venture capital, right? Like good or bad. But one of the misnomers, and one that I think we've seen not be true, is like companies in Arkansas can't get founded. Companies in the middle of the United States can't get funded. Sorry, not founded. And we actually found the opposite to be true, and especially now in the last 5 and 8 years, is that we've seen lots of funds created that only invest in the middle of the country, right? Because there's so much money chasing ideas on the coasts. The best example of that, and the earliest, is Rise of the Rest, Revolution, Rise of the Rest. So Steve Case is the founder of AOL, incredibly nice person, and ultimately made it his thesis of I'm going to ignore the coastal investing trends because there's like a lot of brilliant people, a lot of really great businesses being built in the middle of the country. And so we've seen that thesis grow to lots of dedicated funds that do the same. But the coastal funds are also like, they're not ignoring or not paying attention to us, right? So we've had funds from New York, Chicago, the West Coast, Europe look at our business. Like there's lots of interest in wherever you are. And I think COVID really helped to further. It may have been a little bit weird in 2019. It's not weird today. I don't believe it all.
So you think that's kind of a myth? Like the raising money in Arkansas is really challenging. Would you say that's kind of a myth, or maybe an old school methodology to venture in Arkansas?
I think it's I'm not going to say excuse. That's too rude of a term. I think raising money is a challenge. You don't have to like assign a geography. Raising money in X industry or as X type of company or an X type of locale, X type of person. Like there's money out there. It's really, really hard to do. There is this concept in the world of startups. So like, the field of dreams things, right? Like if you dream it and you build it, they will come. And it's like, that is, we've learned that multiple times. Like we launched AcreTrader and it's like everyone I talked to is like, oh my gosh, I can't wait to invest on there. And we launched it and quite literally no one invested for months. It's a grind. Going and getting customers, going and getting investors are both far harder than I ever expected them to be.
Kind of transitioning here to, as we talk through some of the other businesses we've interviewed, hyper growth businesses in Northwest Arkansas is what we're focused on. So growing at 25% annually a year for at least 3 years, your business is doubling every 3 years. There's some amazing businesses here, including yours. As you start to experience that growth, we'll call it the middle of your life cycle so far at AcreTrader. So we'll say like 2021, 2022, there's a ton of growth happening. What was driving that growth?
At the end of the day, like there's two ways to look at it, right? There's pull and there's push, or inbound and outbound marketing, if you will. So one is we've had some really great marketing and design and brand teams here throughout our life cycle as a business. And so the ability to let people know we exist in the first place is really hard. Something we still struggle with today. The extreme majority of people in the United States don't know we exist. So one is getting out there and letting people know. And then two is trying to create inbound, which is like ultimately the best kind of, the best customer archetype is folks that hear about you from somebody else, usually the way that works, and come seeking your business. And so we've been incredibly intentional about that latter, trying to go and frankly, just give the existing customers a really great experience so they tell their friends.
Mm-hmm. That's good. And so through those kind of years, I mean, you're going from, I don't know how many employees you were at early 2021. I think one of the articles I read was maybe 15, 20 to like in 2022, end of 2022, you're at like 150-ish employees. That's an insane amount of people to hire. And they're totally new to your business. How are you doing? And I think you already kind of hit on some of those hiring practices, but like, how are you doing that well? What did you learn from that?
A few things. So one is being, like I mentioned earlier, being incredibly process-oriented around hiring, having really great HR and talent acquisition folks inside of the business, recruiters. It's something that again, I mentioned earlier, like people, and this is thematic, right? You're going to hear this in every entrepreneur, every business person you speak to, is like people define the business. We can say that, but we have to like really mean that. And the example is the HR function is one that in many places is looked at as like, that's where you do your benefits and your onboarding and boo. I think we really celebrate HR here. It's like that is, the people function is the thing that we should take the most seriously. We can't build a great business without really great people. And so that's something we leaned into and invested in, whether that is the hiring processes, the onboarding processes, the training process, the career growth process. So making sure that folks are feeling their own personal and professional growth each week, each month, each year inside of the business so that we can retain them. Mm-hmm. It is hard to retain really bright people because they want to go do lots of cool things. So it's maybe say differently, it's being incredibly intentional about HR. The lesson learned is that you should not define your success based on the headcount of your business, right? There are far more accurate metrics to measure your success than the total headcount when you are venture-backed in particular.
What are they?
Revenue, right?
Yeah,
like,
there you go.
Absolutely, revenue growth, things like NPS, like your customer reviews of your business and the customer service you're providing, the growth in your bottom line as well is an important one. But generally speaking, like I and many naturally gravitate to headcount as your success metric because it is the most rewarding part of the job to a leader, to the management team. Is like we're helping folks with employment. We're helping families. We're helping folks grow their careers. And we like to say within our walls, like we want people here to skip a rung or two in their career ladder and absolutely use me. Like come use this place to get ahead. This is not an old school, you need to be 3 years for this position, then 2 years for this position. Like merit, like we don't care about your background or your degrees or who you are or what you do outside of these walls. We care you come in here and kick ass every day. And if you do, then we give people a lot of opportunity for growth. I'm on a tangent to say like that is so rewarding that often many folks gravitate to the headcount number as the definition of success. But in our case, we were building something that was not sustainable. In particular, we were building a brokerage business inside of AcreTrader, and that
those are separate or both. They were together.
Together,
okay.
And that was not a highly sustainable business, and so we had to retrench in 23, as we talked about earlier, which was the worst year of my career, and often because I hurt people, because I overemphasized that metric.
Well, and before we get to that, I want to spend some time in 2023. When you say brokerage business, real estate brokerage business is what you're talking about?
That's correct.
Okay.
That's correct.
Where you are, I guess that was kind of one of the big things running through my head is the hands-on approach of having to buy the farms, talk to the farmers, that's a lot of work. That's a lot of work.
It is. It is.
So maybe what were you doing at the time to get that done? And then maybe how'd you switch? What are you doing now?
So we have always been okay with certain things that do not scale, right? Technology scales, diligence does not scale very well. And that's okay. Like we need to invest very heavily in having great people and great teams out there actually doing the underwriting and putting together the deals. What came out of that, and maybe the interesting next chapter in our conversation is acres, and we were very frustrated with the total lack of transparency in the world of farmland, and I mean neighboring parcels selling for 20 or 30% difference in price.
Wow.
And even today, still insane price disparity. Now there's idiosyncrasies, but even when there's two almost identical tracks selling for hugely different prices. And that's a function, in my opinion, or a large part of that is a function of the lack of information. And so we were hopping between all these various tools and data sets and assessors' offices and GIS, and it was this sort of miserable experience to go try to find information about land. And so we built Acres initially for us and for our problem, to solve our own problem, with the hope of launching that, and maybe that'll be a commercial success someday.
In that technology, that Acres, as my understanding of it, is just a ton of data.
That's right.
And kind of in that 2022, 2023 time frame, 2022, benchmark, right? You raised 60 million Series B round. Is a lot of that capital flowing towards building this out, or at that point y'all hadn't even started to really put an emphasis on Acres? We
had actually. So okay. At that point, we had built what we would call the information substrate of our business. We had this gathering of information. We began to build real databases and real early stage geospatial tools to interact with that information. So we had this semblance of what we were calling it acre maps at the time, but we had the semblance of acres inside of the company. And we showed that to investors. And yes, a large part of the investment that we received in that Series B was pointed at, hey, that is super interesting. We love data business. I think data businesses are some of the best in the world. It's what I spent a lot of my career working on. And so wow, we may actually get an opportunity to go put together this data business. So we were building it quietly at that point in time, and in hopes of launching it and getting some real attention.
So before Acres exist, whether be quietly or publicly, how long did it take you to analyze a deal to know, we're buying this farm or we're not? So, and that's clearly a big part of the process, just knowing the investments you're actually going to present to investors or clients or customers, whatever you call them there.
So the amount of time spent analyzing a successful deal has changed, but not hugely. What has changed is the amount of time wasted on all the deals you say no to. And the reality is we should be saying no to the extreme majority of things we look at. I don't know if it's 94 or 97%, but most of the stuff is a no. And we spent almost all of our time on the no's, right? And so you're just trying to find that no faster and faster. And information allows you to do that sometimes instantaneously. And that was not a thing that existed for us 3-4 years ago.
Yeah, revolutionary for you. Yeah.
So now the data is kind of filtering out your nose before you're having a team member really dig into that data. Is that kind of the
That's
summary of
correct.
it. Okay.
That's correct.
Well, and on the just, I've got an account and just was looking around on the app, and just it's so fascinating to see like all the things that obviously y'all can do from your perspective, but just thinking through, you really are a pro farmer on the end of the data's out there. Like go look at it, go use it for your benefit too. I was just looking through some farms in Jonesboro, but just be able to see like this farm was corn, and then soybean, and then 3 years before that it was corn again, and just data can speak for itself.
Yeah, a core theme of our business is transparency, internally and externally both, right? And so the mission of Acres is transparency for America's largest asset, land. And internally, we feel the same. Like I'm intensely interested in the truth, and I think that within our business, transparency is between us as individuals here builds incredible trust and allows us to move much faster as a business. And then I believe, maybe said differently, like self-awareness is I'm stealing this quote from someone else, but self-awareness is the only sustainable competitive advantage. And as a business, you have to constantly be introspective and understand what the market is looking for, and are you participating in that market appropriately. As a person and then as an individual contributor within that business, we all must do the same about ourselves very, very intensely. And so we love the idea, and not everyone does, to be clear. We love the idea of all this information being available to everyone, to level the playing field between my dad and the institution. The information typically levels the playing field for the underdog.
Yeah.
And I'm a huge fan of that idea. It's also the same thing for it levels the playing field internally for us to hire amazing interns. Like some of the most unbelievable members of our team started here as interns. But like we treat them the same. Like I have absolutely no care in the world if somebody, what their age is or what their background is. It's just like, again, I go back to that thing earlier, like, are they going to really kick ass?
Yeah.
And the only way you can do that is by leveling the playing field.
Yeah, let them show up and see what they do.
It's amazing. I think before we keep diving in, we want to hear all about Acres. And I mean, both of us have spent some time on the platform. It's fascinating. Kind of ending that chapter of, we'll call it hyper growth, and then just some kind of right sizing of the business. I don't know if that's how you would describe it, or overextension in some segments. You talked about specifically the brokerage. So did y'all wind that down? Is that gone?
That's correct.
Okay.
So we ultimately discontinued and sold the brokerage.
Okay.
The AcreTrader side of the business is still has been healthy throughout that. We just got ahead of ourselves. We got ahead of ourselves in hiring in particular. So the AcreTrader business today is growing, is profitable, and has an amazing team running that business. So the core AcreTrader.com investing platform is a platform we're very proud of. We're not proud of all the ways that we got here, the mistakes we've made along the way, but we are very proud of what we have delivered at the end of the day to the market and to our customers.
Mm-hmm. And so AcreTrader, you kind of key metrics you're looking at top line revenue growth, you're looking at profitable, and it sounds like it's a profitable business for y'all. And then are you looking at volume of deals? Like, hey, in 2024, we had 30 farms that we listed. The year before we had 25 farms. Like, are those some of the key metrics you're looking at?
Yeah, I think volume certainly matters. What we are unwilling to do is growth for the sake of growth, volume for the sake of volume. And you can see this manifest itself in most of the time when you go on AcreTrader.com, there is not a farm actively funding on the website. Or if there is, there's one. And what that is saying, what that is saying to the world, we don't explicitly say this, is like, we are willing to forego revenue in trade for good quality of offerings on our website. And that has always been the case. We've spent most of our lives as a business without any inventory, because yes, we measure the equity throughput of the platform, but we are far more interested in the quality of the equity throughput, because that's the thing that enables us to continue growing for the years to come.
That's really good. And how are y'all making money from that platform, from those deals? Can you talk a little bit about that?
Yeah, we get paid a diligence fee, effectively, on an offering, and then we get paid management fees. So throughout the life of that farm, we're typically paid 0.75% or 1% of the value of that farm annually. That is much lower than you will find in most of the asset management world when you think about annual management fees. But it is strong enough for us to build a business, and we're big believers here in Northwest Arkansas on everyday low prices.
Yeah. Well, what is that standard asset management fee? Just if you were looking at, just different asset classes.
Yeah, the classic old school is 2 and 20, right? So 2% asset management fee, 20% carry or carried interest is receiving some of the upside you create. There are certainly lower fee funds out there, right? When you go to the zero work funds, the vanguards of the world, their whole shtick is eliminating almost every single basis point of cost you can. But most alternative asset funds are in that 1% to 2% management fee range with a carry on top.
So you got the due diligence fee, you got the asset management fee, and then if the farm ever sells, do y'all get a percentage of that upside, or what is that?
So we participate in a disposition fee there as well. What we typically don't do is have a larger carry structure inside of the deal. We would again, like, if we let more returns accrue to the investor, then they'll come back and invest more with us. And so that's the way it seems like overly simplistic. I'm amazed at how many people go for the immediate money and not the long-term gains there. So there is the unofficial old school motto of Goldman Sachs was long-term greedy. And I appreciate businesses that think that way of like, it is worth building a long-term business, not a flash in the pan.
It's really good. And so I think you talked about volume. Volume is not your most important metric, which we respect, right? Quality is, and that's going to keep your investors coming back. That's going to give them returns. But from a business perspective, you've got to be finding ways to drive volume. And I assume that just really means you're finding the best deal, the best land deals. And so was that the genesis of Acres? Was like, we built this to identify, the best land deals?
Yeah. Like it's just a funnel.
Yeah.
Right. At the end of the day, like the demand side of any business, most businesses, if you're acquiring customers, you have a conversion funnel, right? Like, how many people can I get to come into the front door of my shop? How many of them can I get to go actually try on a dress? And how many of those can I convert to actually paying at the register? And the same thing is true in the world of diligence. It's like, we need more and more people and more tools. And this is where Acres really helps, is it expands the top of that funnel pretty dramatically. So we can have way more throughput and get more shots on goal and get more looks on farms.
Mm. And so that was late 2022, early 2023 was kind of the launch of Acres? Yeah,
we were using it internally and 21, 22. And then we launched it October of 22. We put it on the internet primarily as a consumer tool. And then the business evolved, and so throughout 23, it evolved to becoming more of an enterprise tool. And 24 is where we officially formalized that. And what I mean is, we have a free version of it. We have a thing that's $100 a year or less for a consumer, for most of the people we know, to go interact with information about land. Who owns the property next to me? What are the property lines? Some of that basic historical information, satellite imagery, that kind of data. Then we have a product that is $1,000 a year for the professional. So I'm an individual land broker. I'm an individual who's buying and selling land. I need comparable sales. I need real deep data. And so we have a product for that market. And then we have a true enterprise SaaS product. And that is much more expensive, but it is for big companies where they may have 20 or 50 or hundreds of people sharing an account, right? Going in there and working different aspects of the land acquisition and management and disposition processes, and being able to do so as a team all in one place.
It's great. So early on, there was a monetization structure of charging per month or per year across those kind of three different buckets that you just highlighted.
Yeah. So early on, there was none. We just put it out there for free and just said, hey, come use this. And it was a way for us to find more farmers. And so we put it out there for free. And then we said, all right, now we'll charge $10 a month or whatever for this sort of baseline version. And as the product got better and better, we then rolled out the higher tiers.
And for people like us who have no idea how much it costs to build a product like that, to upkeep a product like that in the tech space, Is $10 a month? I mean, is that a profitable venture for y'all, or is that like, hey, we're keeping this venture going?
It is at scale.
Okay.
Right. Like $10 a month is not a business, right? $10 a month times 10,000 customers or 100,000 customers, like that's a business. And so, and that's a big part of venture capital, right? Is like technology solutions usually have some inherent scalability to them. So it doesn't cost us a lot to go from customer number 7,000 to 70,000. But it costs us a lot to build the underlying fixed infrastructure and all the fixed cost of, I mean, just our cloud compute bills monthly are pretty insane. Our data science team, they're doing some work out back there.
It's crazy. And so I think when you talked with Roby a couple of weeks ago, a month ago, was it 500,000 users is what y'all have? Roughly?
We are approaching that mark.
Okay.
Which is,
and I assume all of those are, that's unbelievable. And then that's in a year time frame?
2, yeah. Okay. But most of the revenue growth of that business, I guess 2.5 years now. But it's, you'd mentioned earlier, like top line growth, like it's growing triple digits. So it's growing very, very rapidly. And a lot of that is our team just doing a great job of putting forth more tools and importantly, putting forth lots of high quality data.
Well, the software is easy and it's good. It's like, that was the first thing I noticed when I got on. It was you can tell immediately if you're going to want to stay on there, if it's easy to use or it's not, and it's easy to use.
For that tool specifically, a lot of the people come in the free version and then kind of upgrade, or do you see, high percentage of them start with just the paid plan? What does that look like?
It is, again, going back to that funnel, like, yes, we have quite a few people that come through and start at a low tier and move their way up to the appropriate tier for whatever they are trying to accomplish. And we have lots of people who just stay free forever. And we're fine with that. Like, we give them some tools to create maps, to find some basic data, and to share maps with other people as well. So they help us market our product to other folks. So our goals are to make this really simple and easy to go and discover the information you're looking for.
That's good. And then kind of competitors in that space, is that Onyx? Is that Land ID? Is it LandGlide? Is it all, like, who are your competitors in that space? And maybe what is different for someone who hasn't used all of those different products?
Yeah, so I think that there are some really great point solutions out there that you've named for if you want to go create maps, if you want to go find some basic assessor data at the county level to understand when this thing was sold. There are some great tools for creating high-powered maps, like Esri is a GIS tool. And it's massive, massive global business. What we are what we have built and are continuing to improve upon is an all-in-one platform. Like, I go back to all those tools you just named existed for us at AcreTrader 5 years ago, but we needed a simple single place to go and to find additional data. So the information that's out there is very, very scattered, and there's no one place where you can go and find deep data. And so today we feel pretty strong that we've solved a lot of the data quality issues that persist in some of those tools. And we are continuing to add more and more types of data, more and more layers of information, if you will, to be able to go discover even more about a particular property or area.
So is any of the data that you're compiling novel, or is it 90% of that data, Nick, was already out there and we're just bringing it together?
All of the above, right? Okay. So we purchase data. We go and put together all kinds of public data and clean it and make it usable, right? The greatest example is satellite imagery. Like, there's some free data that exists out there, but if you want to stitch together historical satellite imagery, you're talking about spending 6 figures to go put that together to make it usable for you. There is then data that our team is assembling manually. So we've got a team of folks who are going out and manually, they're right here in the office we're in today, going out and manually putting data in the system every day so that we can be on the bleeding edge of data quality and data recency.
It's amazing. And that kind of goes into the layers library, which did y'all launch that this month?
We did.
Okay.
We're really
and that's
excited
like
about it.
Deep data. Is that?
Yeah.
Okay.
So what that particular part of our product does is we are consistently putting in more and more information. We're adding more and more layers for you to explore, but it allows you to do the same thing. So I'll give you the example of zoning. right? So zoning maps are a thing that are really hard. And we're not talking about just agriculture now, right? We're talking about anyone in the world of any type of land or development. The ability to see things like sewer maps or zoning, if I'm going to go try to build a new building, it's really hard information to come by. And what you end up having is folks going and getting PDFs from the county and going and using these really difficult public use websites and having 6 tabs open. And so we created the ability to drag and drop that data into Acres, and it lives there forever. So you just heard something that changed the county, like we're out of sewer capacity in Fayetteville is a great example. Tragic, for us wanting to grow as a region. But you can now come and drag and drop that information into Acres, and now it lives in your account forever. So you're going to have access to that, and to be able to easily visualize and analyze that data. So it's the equivalent of, how am I trying to say this? Mapping that type of information, historically, you need quite literally a degree in GIS to do some of this. And we've made it so that business people and Luddites like myself, and I'm despite being part of a technology company, I'm not necessarily great at it, right? This was the reason we built Acres, because we couldn't interact with this information. And we knew it existed in certain places. So we've now made it where the analyst, the VP, the business owner, anyone, my 90-year-old dad, anyone can interact with this information in a really easy to use format.
It's unbelievable. So that's a lot of where kind of you've got AcreTrader and you've got Acres. So let's talk about those together. The business, just kind of bring us up to current. It's 2025, whether it's revenue or growth CAGRs, you kind of highlighted some of that, or employee count. That doesn't sound like that's a great metric. Like what are, as people think through the scale and what this business is, can you talk a little bit about that?
Sure. So Acres has surpassed AcreTrader in size.
And that's revenue size, or is that okay?
Yeah, revenue team. So pretty rapidly. And again, that's not a negative statement about AcreTrader. AcreTrader is a business we are really proud of.
Yeah,
an incredible team building that and continuing to grow it. Is Ben Maddox, one of the folks I've worked with for a long time, like to say, we've just gotten lucky and we found lightning in a bottle again. And it is terrifying some days, right? My hair was not this gray 5 years ago. But as long as we continue to come in and challenge each other to build a better product, to build a better machine for customer service and feedback, and continue to push our boundaries ourselves, we think we can keep compounding it pretty rapidly here.
And so what does the growth look like future forward looking for Acres? And I think you have a TAM, right, for AcreTrader. What is the addressable market for Acres? You're at half a million users right now, roughly. What do you think? Is there hey, we think we can get to 5 million by X date, or what do the kind of growth metrics look like in the TAM for that market? Yeah,
there's billions of dollars being spent on these problems today. One of the companies I named earlier is $1.5 billion in revenue alone. So there's a huge opportunity there, and I would feel silly to think that this year is going to define us, right? We still feel like we're just getting started. It's cool, we have a business, it's sustainable, and we're here, and we're not going away, right? This is officially default alive business, is what we would call it in the world of venture capital. We're not gonna die, God willing. We don't do something terribly stupid. So it's too early to say, but our ambitions are certainly at a pretty grand scale.
Well, and how crazy to say that too, just 18 months or ish after, or I guess really 2 years after that high interest rate hike and just everything that was happening on a macro scale. I know we addressed that a little bit, but maybe talk a little bit about maybe what you were feeling then versus what you're feeling now. And I don't know if there's anything you go back and tell yourself maybe in that 2023 moment that you needed to hear.
Yeah, there's a lot. How much time you got? Look, I think first is the gentle reminder that from the outside, a startup or a fast growth business, it looks like this really great line. And on the inside, it is constantly like this. And so we've had some real low lows outside of 2023 as well. And I think 23 was certainly appropriately the hardest we've faced as a season in business. There was a Churchill quote of like, if you find yourself going through hell, keep going. And that resonated quite a bit that year. If this is really hard, but again, if we look at what we're after, and we're mission aligned here as a people, and we know we can have a real impact, and we can build something, build a lasting impression. Just keep pressing. And so, but one of the values we have on the wall here is like you've got to work really hard to get lucky. And let's be clear here, we have been very, very lucky. But the folks here, we've all been working really hard the whole time, through good and through bad. And you just got to keep pressing and keep pressing, and be hopeful that you can find those streaks of luck. And when you do, press.
Mm-hmm. It's really cool to hear you say that. I mean, a lot of the founders that we've talked to have said the same thing. Just how, from the outside looking in, it all you see is that line, but from the inside looking out, it is brutal. It's brutal. So it's great to hear you kind of highlight that in your own unique way.
There's and there's all kinds of brutal, right? There's the people brutal, then there's doing stupid things. I crashed our website on a Friday night for 12 hours. It's this certificate you have to get the S on your HTTP. I was responsible for renewing that, and I didn't. I didn't know that I'd done this thing. And so our whole team is up working all night long. Like the tech team is just in a total frenzy trying to find out what in our architecture has taken down AcreTrader. And come to find out it's me. And that moment of like no one is sleeping and everyone's working so hard, and I'm frustrated, right? I'm like, why can't you figure this out? What's going on? What's wrong here? And looking back on that, being like, that was 100% my fault. And I caused so much stress for so many folks on our team. And we had customers like, hey, is everything okay? It's just a white screen or a 404 error. So, there's lots of different kinds of mistakes and errors you make throughout. And that wasn't a high point of the business otherwise, but like in the moment, you're like, I think I might have killed it. Like forever killed it. There's some really scary moments in building a business, but the lows make the highs that much better.
Well, it's amazing to see, just in our conversation here today, the amount of ownership you take over everything is so like inspirational here to hear where, hey, it's our fault if we fired you. We made a mistake. Hey, I made a whoopsie, like that website's down. Hey, we grew too fast. That's really on me. People want to follow that leader. People want to, like, the people that were up all night and working, like, people want to say, hell yeah, man, I'll take that. I'll follow that guy anywhere. Like, it's inspirational.
Well, I appreciate you saying that. I often don't feel very inspirational because, my goal is simply to be honest with myself. And it's actually really hard to do that, right? We all cover that up, and we all tell ourselves that we make excuses to ourselves quite often. We make excuses to the people around us. And what I mentioned earlier about that self-awareness being a really great competitive advantage, we feel that way, all of us here as a team. And I have no doubt that if you go ask the folks out there, everyone else will take ownership in our successes and our failures both.
Mm. What is it like being venture-backed? What are the expectations? How does that impact your role here?
So I have lots of bosses, is the first thing to say, right? The folks that work here, they are my real bosses, but I also have a board of directors and a board of observers and board of advisors. And so we've got lots of folks that I need to make sure to deliver to every day when I come to work. That can be really challenging at times and put a lot of pressure on. Being venture-backed in general is a very positive thing. And like, I don't mind having bosses. I don't mind having these folks in my life. And I'll give you some live examples. At our board meeting yesterday, like several of these folks are business partners, right? They don't just say, here's money, get it right, or I'm going to come beat you with a stick, right? Like when things are bad, they're flying down here and spending a week in the office and digging in and being helpful to get through those times. When things are good, they're coming here and spending that. We had one of our board of directors here all week this week, spending time and being a mentor to the folks that work here and helping them. And this is a person who had 400 people on his team at Google, was responsible for Google.com's homepage. And he's taken time out of his day to come dig in and and show some love to the folks that work here. So having a board, having bosses, having venture investors has been really positive for us in that they have provided guidance. Like most days, almost every day, I don't really know what I'm doing, right? Like we're all figuring this out as we go. Being surrounded by experts that have seen this movie time and time again is incredibly helpful.
Well, now we're back at present day. We kind of talked about what's going on here in the company. What's next?
I hope that the journey continues to be as fun as and interesting as it has been. So what's next for me? I hope to continue to grow. I have a lot of growth I feel like I need to get done. I have a lot to learn. And I think most of the folks I work with feel the same. So, it's really about enjoying that path, about growing personally and professionally, and growing the business alongside that. So I don't know that there is a finite period in time that we're looking to identify in terms of what's next, other than like, we're having a good time. Let's keep pushing and keep building and growing together.
It's fun. We just have a couple minutes left here. How do you define success?
I'll go back to what I just said a moment ago. Like, success is not a point in time, right? This isn't some mountain. You get to the top and you're like, yay, I'm done. So success to me is enjoying the journey. Success to me is ultimately, if I am, looking late in life, like it's being my 90-year-old dad who wakes up and works and reads and travels and enjoys his life. Like that'll be success to me, is if I can look back and be proud of my life and proud of the risks I took. One of my dear friends, a guy named Will Slabaugh, worked on my team at Stephens, and when I was considering going and taking this big risk of moving to San Francisco, I was having some moments of remorse or regret. Like, this is maybe a bad idea. And he reminded me, he said, look, make all your most important decisions as your 80-year-old self. And when I do that, it becomes so much clearer. Look, I want to look back, and I hope I live that long. Who knows? But I want to look back and be proud and have lived a fulfilled life and have been a good dad and a good partner to folks and have helped people along the way and learned and grown a lot. So that was a long-winded answer. Success is about having a great journey and helping others along the way.
And then kind of, the title of this podcast is Northwest Arkansas Founders. Your office is here in Fayetteville, which, I would say in itself is probably unique here in Northwest Arkansas alone. You're one of the probably fewer, much larger businesses that are headquartered downtown here. But what's your vision is for Northwest Arkansas in the next coming years?
The thing that I love a lot about this place, it gives me a sense of place and a sense of pride that I get the opportunity to live here. But when I try to boil that down, there's a thing that, this is somebody else told me this when they moved here to join AcreTrader. My friend Garrett McClintock, when he moved here, he's like, this place has a small town feel with big city amenities. And I hope that we can maintain that. I love the revitalization of the square in the United States, right? This isn't just a thing happening in Fayetteville. It's happening all around the U.S., where there's a move back to growth and urban density, folks spending their time on the square downtown. And I've seen it here in the 7 years I've been working here in and around the square. It's like just the foot traffic, the amount of people spending time here, and the growth in restaurants. And so that feels really special. We have to maintain that as a region and continue to be a great place to live, continue to be a place full of people that care about one another. So small town, big city amenities, I hope we have that.
Well, as we kind of wrap up here, I think one of the things we love to do is reflect on kind of what we learned through the conversation. I think one of the most fascinating things to me and things that you clearly do well is move fast. And the quote I wrote down is run like you're being chased. And it sounds like it's a mantra for you as a founder, for your team here and what y'all are building. And just really, really neat to learn that, move fast. And I think the next thing that we've loved about almost all of our founders that we've interviewed so far in Northwest Arkansas, and I think you really illuminated this, was your love for your team. And You talked about some of the hard times, you talked about the good times, but you said, quote, people function is the one that we take the most seriously. And I think if you're a founder and you hear nothing else, please hear that. Please take people seriously. And thank you for doing that in our community. And then the last thing that I think you were unique to was just your ability to get tactical. That was the word you used. And I loved this idea of rolling up your sleeves and getting into the business, getting into the details. When we walked through earlier with Morgan, we walked past your office and she was like, yeah, he's never in there. And I think that speaks to your character, and you're buzzing around the office, you're rolling up your sleeves, you're getting in the data, you're building with your employees. And like you just said, they're your boss. And how admirable is that? And I think you kind of talk about luck, and you talk about some of the outcomes, lightning in a bottle. I think those things go hand in hand. Your ability to roll up your sleeves and get in the details with your team. And so I think you talked about how that sets a foundation for what you're going to build, and just really, really cool to learn that. So Carter, thank you so much for the time. How can people learn more about you or learn more about AcreTrader or Acres?
Yeah, learn more about our business. You've heard way too much about me already. It's uncomfortable. The AcreTrader.com and Acres.com. And so AcreTrader is for farmland investing. Acres.com is maps and data for land people.
Amazing. Well, thanks for your time.
Thank you both.
Thanks, Carter.